Be Wealthy and Smart, episode 1094.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why the stock market is at a crucial level and what it really means. And is the bottom holding or is something else happening here? There's so much speculation about what's going on in the market. And my last podcast, I gave you the bullish outlook because I truly believe that things are about to turn for the better. And it's something that most people aren't expecting. Now, there's many reasons for this that I reviewed in that podcast, and if you haven't listened to it, I highly recommend you listen to it. But one of the simplest indicators that you definitely want to pay attention to is the sentiment index. When you have 60% or more of people bearish, that is a very important sign, and it often coincides with bottoms in the stock market. So we're going to talk today about, could the bottom be in or could it be near, or what is the market telling us right now about a possible bottom? Now, today when the market opened, I expected that we would see a down day, or at least a down morning, and then possibly the market turning up in the afternoon, leading into a positive reversal on Tuesday, and maybe even throughout the week. I feel that we are somewhere close to a week or so to finding the bottom of the stock market. And the fact that the market is really hanging around the prior lows from June, well, that's a very interesting sign. You see, on Friday, the market tested the level on the S&P 500 that was 3692, just above the June low of 3675. Now, it's common for the stock market to test the lows. That means to go back down to the low level of the stock market before starting off on a new bull market. The reason it does that is to see if those prior lows are going to hold or if the market is going to move lower. And after Friday, I said three things could happen. One, the June low could hold and the market could rebound. 2, the low could break below slightly and then rebound. Or 3, the lows could break through significantly and go to a lower low before rebounding later. The best situations would be number 1 or 2 because they would be signaling the worst is in and the recovery is underway. If number 3 happens, then we would need to reassess where the downside level might be before recovery. Now, there's a lot of talk that the Fed has actually overdone its interest rate hikes and that it's been too aggressive and that will lead to an economic downturn. With energy down more than 8% on Friday, that was an indication that not only is the economy possibly slowing, but also inflation will be coming down as oil has already declined over 30%, plus now this 8% additional decline on Friday. So you have close to a 40% decline in energy prices, which is usually a precursor to inflation dropping dramatically, since the largest cause of inflation is energy. So that's extremely positive for the possibility of reduced inflation ahead. And this is something that most people are not expecting. The dollar also hit its highest level since 2002. And that is typically not good for corporate profits, especially for multinationals who have to convert their foreign dollars into US dollars and are going to get less if the dollar is too strong. So, where does this leave us in the stock market? Well, there's several positive outcomes ahead. 1, the hard landing scenario may be overdone and the economy may be in better shape than we think. The predominant reason I can say that is because here we are at the end of September, and many companies have not reduced their profit outlooks. That means profits are still staying strong, and that means we're not expecting to see the hard landing scenario. If we were, a lot of companies would be downgrading their earnings one after the other, and it would be indicating weaker days ahead. Number 2, the inflation numbers could be much lower than anticipated, which I think is quite likely due to energy prices tanking close to 40% this year. Number 3, we could see the dollar reversing or weakening a little bit, and that will help cause stocks to rise. A weaker dollar tends to attract foreign money, and it is better for multinational earnings. Now, the wild card out there is the BRICS nations, Brazil, Russia, India, China, South Africa, plus some other countries like Turkey, Saudi Arabia, and others who have now joined the BRICS alliance. There are rumors that they are about to do away with dealing with the dollar completely. Not for oil sales, not for gold sales, not for any international transactions among each other. If that's true, we could have seen the peak of the dollar, and we could see less demand for dollars in the future. Now, today, Monday, we're seeing the market decline, but it has not gone below the intraday low from June. If it closes below the low of June, then we may have a new low just slightly, which really gives us a chart formation of a double bottom. If the stock market rebounded from there, that could be a very bullish sign that the market will go much higher. Now, if the market continues to break through the lows from June and give us lower lows that just continue on for some period of time before bottoming and turning, that could be giving us a little bit different indication. But I think we're about to get some good news from the economy with lower inflation numbers that's going to help the market rebound because most people are not expecting good news. And any good news, or less bad news, if you will, on inflation is going to be a positive surprise that I think will lead the markets higher. So the opportunity here is on the upside, and that this is a fantastic time to dollar cost average in and continue to buy low, as we're going to see a very strong rebound as we work our way through this bottoming process. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.